Hello all. Welcome to Liquidity Narrative. Once again, today we are trying to run our accountability review, just like we promised, to look into what was analyzed and what happened in the market. This is not to say, okay, I was right, I was wrong, but this is to figure out what works and what didn't work and what to learn from what works and what didn't. So, apparently, starting with the US tech, like we always do. Last week, we mapped out and declared that our drawn liquidity remained on the upside, which was this level. And then we are looking at those levels to act as a support. And we apparently narrate that liquidity lies on this level. The link to last week analysis will be added in this review so that you can compare and see exactly what was analyzed and what we are reviewing and know where we didn't get it right and where we got it right. So we mapped out draw liquidity to be the upside, especially here. We're looking at this level, and then the narration, we declared that we wanted to see this level as a support, but if price continue to drop low, we want to see this liquidity pools being respected after being taken. Then apparently price resumed, and this level was reacted on as at the Friday before this whole new week. This no, who no, sorry, before this whole new actions took place. So why would this place add as a support? We said there was a gap on the weekly time frame, and price returned to that gap as at Friday, respected the gap, didn't break lower on that gap. So when price resumed as at Sunday this week, price ran to our draw on liquidity. Apparently, anybody would have missed this trade because this was a gap created and price ran to this liquidity. So what again should you be doing after that? Because this area has added as a support as at Friday, the 22nd of May. So price ran into the draw on liquidity as we expected. Price might not get back to give you this so much discount in your trade. So apparently on Monday, price created a new low, which was this low, and price became our the liquidity pool. Price came back and took out that liquidity pool and then clear the new high it created as a Sunday and Monday, and that was it on US Tech Nasdaq. This is what US Tech Nasdaq did. So we can apparently say the objective was achieved and the zone or the support, the gap was respected and the liquidity levels that we mapped out wasn't taken. But the first one was the one which was this level, was the one that price respected before doing whatever it was doing for the week. So US Tech, the drawn liquidity was respected. So moving on to British pound USD, let's see what happened in British pound USD. These are British pound USD. We mapped out levels that we wanted to see price get into before the week resume. So that was it. If we go to the daily time frame on the British pound USD, these are the areas we've mapped out as our liquidity pool and then our draw on liquidity. Let's count the candles. 1, 2, 3, 4, 5. So this is what we had. And we are looking at this level as our draw on liquidity, which was a fair value gap on the weekly time frame. And these levels are the areas where liquidity pool lies. So let's drop maybe one page or the 15-minute time frame, which apparently we use for this. What happened if we drop on the 15-minute time frame to make it more clearer on those level that we mapped out? Let's see exactly what happened as the market resumed on Sunday, okay, Friday, on Sunday, which was the 20 Friday. Sorry, let's get okay. This is Sunday. All right, the market resumed. Let's just give a clear, okay, this is market resumption 17. Yes, this is what we had as at Friday. We had this level or this level. We are not there. So we said our drawn liquidity remain on this level that we've mapped out. So what happened? Price opened on Sunday and price ran into our draw on liquidity, but didn't get to our liquidity pools first. So what happened? after price ran into our draw on liquidity. So objective was apparently achieved as at Monday, and price returned back to clear out these liquidity pools we mapped out. That's why most times we'll say whichever one that is being run first. As you can see, price was close to the draw on liquidity as at Friday when price closed, took out as high, ran into those levels, and then price came back to run out all these mapped out liquidity levels. As you can see, price came back, run out the first one, run out the second one, run out the third one, and finally run out the first level of liquidity. So what normally happens in price is like when you map out your analysis and where the liquidity lies and what your draw on liquidity might be, price can do one or two things. First of all, get to the draw on liquidity because apparently maybe it was already closed or choose to, and get to the draw on liquidity. After the draw on liquidity, you expect price to reverse, and then price reverses and get to those liquidity pools where we say liquidity lies on, and price might also open and get to your liquidity pool, giving you a clearer entry to your draw on liquidity. That's why most time we say whichever that is run first, the next becomes the point of attention. So after this, price came back, took out the liquidity pool. Immediately after the liquidity pool, price continued to run back and back to the zone of draw on liquidity, giving you another chance to be in this trade. If you missed this and then you didn't get to these ones, you would have also gotten another opportunity to take this trade as at Thursday. So that was it for British Pound USD on the accountability review. So the next pair that we actually narrate was the Euro USD. Let's see what happened on Euro USD. As you can also see, our draw on liquidity on Euro USD remained this level, which is also a gap on a weekly time frame. So Euro USD opened on the 24th, yes, Sunday. This was Friday, so our first round liquidity was this level we mapped out here. If we remove this, let's remove this so that you can see that if we remove the bigger one, which was, so you can see this level was our first before the market opens on Sunday, created a new one. So let's see what happened. Market rally up but never got to our draw on liquidity. As you can see, it never got to our draw on liquidity even here. And then price came back, took out the first liquidity pool, just like we said, and then gave us an entry and finally got into our draw on liquidity. Unlike British Pound USD that got to the draw on liquidity first, came back and gave another opportunity after taking out the liquidity. And that, like, let's see, like the Euro USD got to the draw on liquidity, came back, took out all the liquidity pools, then run back to the draw on liquidity. Euro USD, first of all, came back, took out the liquidity pool. The first one never got to the second, never got to the third, and then give us an entry and back to the draw on liquidity here. It rallies here, never got to the draw on liquidity. So we know that we still have our expectation for buying. Asking ourselves, where were you going to buy? It could have been here, but then price came back. It could have been here also. Price came back and took out the Friday, the previous, yeah, the low here, and then rally up to our draw on liquidity. So we can apparently say that the Euro USD, the British Pound USD, and the Nasdaq played out well, respected the zones, and then ran to where they were looking out to get to. That was it on our accountability review on Euro USD. That's why we prefer to look into structure over speculation. Remember, the institution traders always leave something in the market to guide you to trade. But if you watch out very well, you'll be able to get a clue on what to do. But if you don't, you would trade like the rest of the retail traders, and that's very dangerous. That's the reason for this channel. Watch out for our narrative for the new week. Have a lovely time. Thank you.